So now we're looking at the whole risk module. So in terms, oops, see somebody else coming in now. Yeah, there's Christina. Right. So on the risk module, you have the mock paper, and as I said to you earlier, the real paper is going to look exactly like the mock paper in terms of format. Obviously, the numbers and things will change, but that is all there is to do with it. So, in terms of what we said we would do today, giving you an insight into the real paper. I can tell you absolutely 100% that question one on the real exam paper is going to be to prepare a trading profit and loss account and balance sheet. So that is, and that's where all accounts begin. And it is important that you know and understand the format and how it looks. So what I'm going to do is I'm going to share my screen with you. There's screen two. Share. Now, hopefully you can see the spreadsheet there in front of you. So that is the cover sheet. So let's just start with the cover sheet maybe. So again, the real exam is going to be the same. Uh, Four questions to be answered. You have to answer question one. You have to answer question two, and then any of the other two questions. And again, the questions are going to be on tabs on the bottom of the spreadsheet. So question is compulsory. Following balances were extracted. There's the trial balance, and then there's the adjustments at the end. And just remember, and this applies to credit management as well as risk, just make sure you're aware of the different parts of the question. So in this question, there is three things you are being asked to do. One is to produce a schedule of adjustments. Two is to produce a trading profit and loss account. And three is to produce a balance sheet. So there's three things you need to do for this question. And the best way to go through it is in order. So this is what you have to do. And again, you'll have a trial balance, you will have adjustments, and then you have to prepare this. So what I will do is I will just I'm going to do it here. So here is a schedule of adjustments. So that is fine. So let's just do our schedule of adjustments. So what we will do is we will start off with um what will we start off with? I start off with this. So let's start off. So the first thing we have depreciation to be provided on motor vehicles at 20% of cost. So let's just pop this in here. Paste depreciations on motor vehicles. So we look at our trial balance, and there's cumulative depreciation on motor vehicles, and the figure for depreciation is 26,100. Now, the reason we are doing a schedule of adjustments, and this is important that you get this. The reason we're doing a schedule of adjustments is that when we're doing a profit and loss account, we want to see from the numbers, did the company make a profit or a loss in the period we are looking at? So the period in this one, albeit a couple of years old, is to the 31st of December 2023. So I want to know, did they make a profit in that figure? So that's why I have to adjust the figures. So format cells, I'm just going to do it with a number, no decimals, and the comma, because it kind of keeps it. I just think it keeps it clear. So our cumulative depreciation on motor vehicles is from our trial balance, 26,100. We have it there. The says we have to provide motor vehicles at 20% of cost. So this is so I put in here trial balance, and I'm just doing this for clarification. This is the adjustment, and this is the adjusted balance. So that is what we have to do here. So there we go. So what is the adjustment? Well, it's 20% at cost. So that is, there's our motor vehicles multiplied by zero point 0.2 for 20%. So we have 26,100 in the trial balance. We have to adjust it by 8,700. So now our adjusted balance for depreciation for that year is now 34,800. Okay. So, and when we're looking at our cumulative depreciation on motor vehicles, the depreciation figure is now 34,000. It was 26,100 last year. We've had to take another 20% this year, and our balance going forward is 34,800. In other words, from a simplicity perspective, we used up 8,700 in value of our motor vehicles within the year. So, and that's going to affect our profit. So the second thing is fixtures and fittings. So again, where's our fixtures and fittings? Copy that, drop it in there. Fixtures and fittings. Sorry, sorry, I did the wrong one. Cumulative depreciation, because depreciation we're looking at. So cumulative depreciation on fixtures and fittings. There we go. Sorry. And the figure we have is 26,400. There we go. What does it tell us? It tells us that we have to depreciate at 10%. So it's our fixtures and fittings at cost multiplied by zero point 0.1, which is 10%. And now our adjusted balance for depreciation is 39,600. That is brilliant. Okay. So that's our depreciation. That's our adjustment. That's our adjusted figure. And that is all you need to do. The third thing is interest payable on loan for last quarter. 5270 to be accrued. So now where's our interest payable? Bum, 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 bum. Loan interest. Yeah. Loan interest there. Copy. Loan interest. So the figure in the balance sheet is 15,800. So plus my 15,800. Sorry, that goes in there. So my loan interest paid, and it's telling me now that 5270 has to be accrued. So 5270. So So loan interest paid. So again, my the loan interest for this year is 21,000. It's the 15,800 that's in the trial balance and the adjustment of the 5270. So now my loan interest paid for the year is 21,070. That's the charge that relates to that. Then we have to look at the next one is insurance. So it's saying insurance includes a new policy costing 8,000 per annum, which was paid for 12 months in advance on the 1st of July. So again, we're keeping the sum simple. So we know that yes, we paid the 8,000 out within the year. Only half of that relates to that year and half relates to the next year. So um in terms of our where am I now? Uh, the rent rates and insurance. So there's rent rates and insurance. Bump, bump, bump. It's 21,600. That's sorry. Undo, undo, undo. Yeah, redo. And so I just copy that into there. So that's my 21,400. And what do I have to do? So out of that, 4,000 is prepaid. So even though I paid out 21,800, uh, my adjusted figure is now 17,500. So it's the 21,000 that I have in the trial balance less 4,000. That's a prepayment. So that is that. And then from a bad debt perspective, it says um, provision for bad debts is to be adjusted to now watch the adjective there. So it might say it might be adjusted by or to. So it's saying the provision for bad debts is to be adjusted to 1.5% of debtors. So let's see, what do we have for our bad debt provision? Um, boom, boom, boom. Let me see. There's provision for bad debt. There we go. So copy. So my provision for bad debts are 5,500. That's grand. We know what it's to be adjusted to. So it's to be adjusted to 1.5% of debtors. So now we just take our debtors figure and multiply that by point oh one. What is it? 1.5, 0.015. So that's 15%. So we have a provision in of 5,500. We want our provision to be 7,127. So the adjustment is the difference between these two figures. So it's plus 7,000 minus 5,500. So I need to adjust my provision for bad debt by 1,627 euros. So that's my provision. So that's it, guys. That's your schedule of adjustments. So now I have adjusted all the figures in the trial balance, and now I'm ready to move on to the second part, which is the trading profit and loss account. So copy and now pop that in there and paste. So now here is the trading profit and loss account for the year. So all now I have to do is remember the format of the P&L, and this never ever changes. So where does it start? It always starts with sales, right? So let me see. Boom, boom, boom. So we start with sales, sailors, sales. And what are our sales? And in the thing where it says, boom, 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 where's the big figure? Purchases and sales. So it's telling you purchases and sales. So that is your purchases figure. That is your sales figure. So there's my sales figure there. Okay. Oops. Yep. Then what do we do next? We then put in our opening stock. Our opening stock is what? The opening stock, it tells you, is 158,305. So you can put that wherever there. 158,305. Our purchases is 162. So I'm literally just copying these figures and popping them in here. What do I have to do now? Oh, I did that as a percentage. 1651042. Grand. So then we know that, and then less closing stock. So less closing stock, and the closing stock is in the adjustments, and our closing stock, it says, is 150,500. So copy that. And you can do it this way, or you can type in the numbers, whatever. So now, so I add my sales, uh, so I add my opening stock, I add my purchases, and I subtract my closing stock. And that then gives me my cost of sales. So that is our cost of sales. And then gross profit. Gross profit is my sales minus my cost of sales. So there is my gross profit figure there. And then what we have to do is we just have to put in the expenses. So let's go through the list and identify what the expenses are. So what I've done here, just to save time, I'm going to just put all my expenses in there. So where are my expenses? So wages and salaries is 356. That's grand. Admin expenses is 78,560. Distribution and transport costs are 49,500. My insurance. Now, here's the first one because my insurance is adjusted. So even though the insurance in the trial balance is 8,000, where is it gone? Sorry, insurance.
In
No, but sorry,
adjustments.
it's rent rates and insurance. Sorry, copy. So the figure I have there is rent rates and insurance. So that figure is 21,500. But what you have to, and this is where you have to make sure that what we take is our adjusted figure. So it's not the 21,000 in the P&L account, it's the adjusted figure. So there we have 17,500 is my figure for that year for rent rates and insurance. The depreciation charge. Now, again, it's probably easier to split them, rather than doing calculations. So, you have depreciation on motor vehicles and depreciation on what fixtures and fittings. So again, it's the adjusted figure that we bring in here. So my cumulative depreciation on motor vehicles is 34,800. My cumulative depreciation on fixtures and fittings is 39,600. And the increase, and again, the only charge for this year is the increase, which is my 1621. So 1627 even. So let me see if that all adds up. So add that 5 7. No, I've missed something, have I? 356, 78, 49, 550, 17. Sorry. See, it even shows I can make a mistake. What I did there was I took the cumulative depreciation. This is a P&L account. I should only take the depreciation for the current year. So my depreciation on motor vehicles for the year is stop is 8,700. And my depreciation this period for fixtures and fittings is 13,200. Sorry. So I'm just taking for this period because this is the P&L account. So now I have 525, 477. And then what I do is I would just put in my gross profit minus my expenses, and that 191,276 is your net profit. That's grand. And then we have to do interest paid, less interest, less interest paid. And what interest have we paid? So there's 15,800 in the trial balance. There's another 5,000 that we have accrued. So my interest figure for the year is the 21,070. So that's interest paid 21,070. And then if we add our net profit minus our interest paid, that 170 206 is, you can call that net profit before tax, or you can call it retained earnings, or whatever you want to do. So so that is that. So based on that's the interest we paid in the year, that's the expenses we had in the year, that was the gross profit we made in the year. So now I know that as a result of calculating the figures, that we made 170,206 profit. So and that's the P&L account. So that's all you have to do for that. Um so now we're ready to rock. We'll move on to part B, which is our balance sheet. So again, copy, balance sheet, bump. And again, that's always got the same format. That's your profit and loss account, and that's your schedule of adjustments. So there we go. So on the balance sheet, the first thing we list are our fixed assets. And in this, we only have three types of fixed assets. We have, in terms of the fixed assets, we have, now what I'm going to do here is just for the hell of it, I'm going to just drag this down for a laugh, just to make life easier for us. So there you go. So here is the balance sheet. So the first thing we have in our balance sheet is motor vehicles, sorry, premises. Usually we list them in order of value, if you know what I mean. So anyway, so fixtures and fittings, and motor vehicles. So there's three things we need to know. Oh, I don't know why that news thing keeps popping up on me. So the first thing we need to record is what it cost, what our depreciation is, and then what the value is. So they are the three considerations from the balance sheet perspective. So our premises, uh, 430,000, and we don't depreciate premises. And that goes back to historic because apparently property prices shouldn't go down. So what did our fixtures and fittings cost us? They cost us 132,000, and our motor vehicles cost us 43,500. Okay. Now, for the depreciation figure, this is where we take our cumulative depreciation. So our cumulative depreciation on motor vehicles is 34,800. 34,800. Our cumulative depreciation on fixtures and fittings is 39,600. So that's the cost, that's the depreciation, so that is the value. So that's how much my fixtures and fittings are worth now, and that's how much my motor vehicles are worth now. So that's grand. So if I add those three figures together, 531,100, that is how much my fixed assets. So maybe I can, so there's my fixed assets. So now I know how much my fixed assets are worth. Now we move on to the next thing, which is current assets. And what current assets do we have? So we have stock. We have so current assets below that. So our stock, and obviously it's the balance sheet as of the end of the year. So the stock figure is the closing stock, which is 150,500. Which is fine. What other thing do I have as well? I have bank. And where's my bank balance? Is 7852. Now, just watch the bank because that's the only figure that can appear on either side of your trial balance. So if it's on this side, it's an asset, it's money that we have. If it's on this side, it's an overdraft and it's money we owe. And a simple way, rather than beating yourselves up over debits and credits, just ask yourself, is it on the same side as debtors or creditors? So if it's on the same side as debtors, that means it's money that you own. If it's on the same side as creditors, that means it's money you owe. So that's just a simple way of working out the bank. So in this case, it's on the same side as our debtors, so that is money that we have. So that's our stock, our bank. Sorry, let's get rid of that. What's my other current assets now? My debtors. So now you can show a net figure, or I prefer to show everything separate. So I will get the debtors figure. Debtors, there we go. So there's the debtors figure. and less provisions. Less provisions. So what is my from the adjusted? So it's 7127, which is so 71 so 7127. So that's, well, I'll put in a minus there just to show this minus. So that is my provisions. And where am I now? For so that's my provisions. Or if you want to just put in a single figure for debtors, that's okay too. And then the other thing that's in my current assets is my prepayments. So I paid 4 grand in insurance that that relates to next year. Sorry. Uh, Prepayments is 4,000. So that is also a current asset. So if I add those numbers together, um, I get, so that's my total current assets there. Total assets. So now the next thing I need to do is my current liabilities. So this is the money that I owe. And who do I owe money to? I owe money to creditors. I keep, yeah, fat fingers, obviously. ID ORS. So what are my creditors figure? It's 330208. That's my creditors. I have my accruals, and that comes down to my 5270, the interest that had to be accrued. So that's money that we owe, even though it's not in the trial balance. So we have to adjust that accruals. And then there's a VAT payable there, a tax, um, yeah, tax payable. So that's net tax payable. So that's a creditor. That's money that we owe as well. So that's 84075. And the last thing then that we have to include in our current liabilities, remember, current relates to 1 year. So that is fine. So our mortgage has 10 years remaining at, and we owe 301,000. In other words, to divide it by 10 simply, we have to pay 30,100 per year. So if we have to pay 30,100 per year, our mortgage is 30,100. So we have to pay 30,100 next year, and then the balance goes in as a long-term loan. So let's just do that. Add those up. Um, so now I have 449,653. Then I add my current assets. No, I'll do it over here. I add my current assets, subtract my current liabilities, um, and that gives me our key figure, which is working capital. That's my working capital figure. Then I have my long-term liabilities. Um, Long-term liabilities. And my long-term liabilities is my mortgage, which is 301,000. Uh, Mortgage 301,000 minus my 30,100. Because that's how much I'm going to pay this year. So my long-term liabilities have reduced. So I've just split the mortgage between long-term and current. So that is fine. So that's my long-term liabilities. So now, how much is my business worth? Well, what I have to do is I have to add my fixed assets, which is there, to my working capital, which is there, and then subtract my long-term liabilities. So my the balance sheet that I have now is 440906. So that's bold, and we'll do what top and double border. So there's 440906. So let's see how we're doing here. So where did that 44906 come from? It came from capital, and my capital is 2000 grand. It comes from retained profits, and there's my retained profits, 268,700. 268,700. And then my profit this year. And my profit this year is from my P&L account, which is my 170,206, 170,206. And then what we'll do is we'll just add those three numbers together. Sorry. And lo and behold, it balanced first time. So there's the capital, the retained profits, and the profits. So my balance sheet balances, and I'm fairly sure that I have everything. Now, look, when you do it, it won't balance. So again, let's stop worrying about that. And if you get the order right. So if you get, your the adjustments. So you will get marks for everything that you get right. And you will drop marks for everything that you get wrong. So if you have the format right, you're fine. If you get the gross profit right, you will get marks for that. If you have your expenses right, and if forget to carry the one, or miss out on something, yes, okay, you'll drop mark for that. But by listing the expenses, you get a mark for each one that you get right. So, and if you forget an adjustment or something, you might drop a mark. But getting the format right is the most important. And then if you get the numbers right, well and good. Um, what I would do is, I told you already, spend the first 40 minutes. Now, I did that, in half an hour where I was explaining it. Um, or less. So you have 40 minutes to do that. Um, so just do that. If it doesn't balance, spend a couple of minutes seeing if you can find your differences. So the only two things, like everything in the P&L and balance sheet, so from your trial balance, everything must be go from there into there, and the adjustments have to go in twice in order to make it work. So if you look at the depreciation, 20% of cost, your depreciation has gone into your P&L account, and depreciation has also gone into your balance sheet. So your your adjustments go in twice. So your increase in provision, goes in as an expense, and it also goes into your balance sheet as an adjustment. So, just everything that you do, your adjustments go in twice, and even closing stock, your closing stock appears here, and your closing stock appears here. So anything that's not in the P&L has to go into your P&L and balance sheet twice. So if it doesn't balance, just subtract one number from the other, see what your difference is, see if you missed something. There's lots of different ways. So, you know, and just check that you've got all the figures, check that you have, you know, everything in the right order. If you get one number wrong, and if you get one number wrong, the balance sheet won't balance. If you get 10 numbers right, then you're going to get 10 marks, 10 out of 11. So, let's not panic about it. Um, the other thing that I find very simple is, um, if you subtract one number from the other to find your difference. So say for example, now I have, oh, my balance sheet doesn't balance, so I can just that minus that. So my difference is 2,000. Oh, look, I never put in the figure for capital. How stupid am I? So you can do that. Um, if you can't find the number, um, So what I would do is so now, oh God, look, my balance sheet doesn't balance. I'm 14,254 out. Um and I'm looking down the figures and I can't find a 14,254. What I would do is, and I've always done this, divide the number by two. And by dividing number by two, I find a 7127. And I go, why is 7127 significant? Oh, look, provisions. I put in less provisions, but I bloody added them instead of subtracting them. So if you add something instead of subtracting it, it'll give you double the difference. Okay, that's that. And then something, I don't know whether it's only me, but anyway, it can be me. Um, if you find a difference, sorry, I just undo that. Um, if the number that you get can be divided by nine, see the way that's divided by nine. If it's divided by nine, what it means is you have transposed the number. You put in 260 instead of 206. And if you put in 84057 instead of 57, the difference you get will always be divisible by nine. So if you find, I can't find an 18 there. So by knowing it's 18, no, I've messed up a number. I should have had 75 instead of 57. But look, if you put in a 75 instead of 57, you're going to lose one mark out of 50. So, like, let's not, the whole thing is not to get too upset about it. Are you with me? So, there's your three questions. Your cumulative adjustments done, your trading profit and loss done. We have a profit figure established, and there is the balance sheet, and it balances and all is well. And I said, even if it doesn't balance, don't worry. Is that okay? So what I'll do, I'll just stop sharing now for a minute. Um, and let's go back. Is everybody comfortable with that? You give it a go. Right, okay, well, give it a go. And as I said, if it doesn't balance, don't worry. Now, like if you gave me a profit and loss account that said, sales plus purchases minus premises is profit, here's somebody who just hasn't a clue what they've no idea what the numbers is. If you say, my cost of sales is my sales, opening stock plus purchases less closing stock, you know, if you get a number wrong, and the way I have done it here in terms of, doing formulas and all that kind of stuff, it's something I would recommend. Um, that and then the way I've done the question, the answer beside the question, you know by putting in formulas, what you're showing me, and I won't be correcting it, but anyway, you're showing whoever's correcting it how you got to the answer. And if you think, look, she added the interest instead of subtracting it. So, okay, you know what interest is, you got the right number, you just did it the wrong way around. We make allowances for that. If you just write in a number and it's wrong, then we can't give you a thing. So give us a chance to give you marks, is what I'm saying. So if we see your logic and yeah, okay, I can see what happened there. They took the adjusted figure instead of the cumulative figure. Like they're in the right ballpark. You might get half marks for that. Is that
Uh,
okay?
yeah, Declan,
Yeah,
sorry, can I just ask you something?
please.
Um, on the C part, this question, I kind of did something a little bit different, and I just would like to confirm about the mortgage.
Yeah,
So yeah, I actually put the full number, like
as a long term.
3,001. Yeah, I just I saw I remember you explaining about how you make the calculation for the year. So on the statement that it was provided, so it's that full number for 10 years, not just for the current year, right? So that's why
Yes.
you needed to divide it. Yeah.
Yeah. And the question will always tell you, how many years are left on the mortgage. So,
Okay.
I can just share, go back there. So it does say the mortgage, 10 years remaining, and you owe
Mhm.
301,000. So if there's 10 years remaining, that's 30,100 a year has to be paid. So 30,000 has to be paid next year. That's why it's the current asset. But look, the gas thing about it is the gas thing about it is that if you forgot that completely, right? And
Mhm.
if you put in your long-term liability as, I don't know why this news thing keeps popping up. If you put in 301,000 as your long-term liability, the gas thing is your balance sheet will still balance, so and you'll get 49 out of 50. And also remember, in terms of the marking structure, and maybe you should have mentioned this on the multiple choice question. On the marking structure, anything over 80% is a distinction. So if you get 81% or 99%, from a marking perspective, it does not make any difference. Is that all right? You'll still get a distinction. So even if you don't get 100%, even if you only get 81, when you get your results letter, it will still have a distinction on it. So just you don't have to be perfect. Is that all right? So
Yeah.
I get rid of
Thank you
that
so much.
perfectionist out of you altogether. So yeah, yeah. But like what I've done is I've done it perfectly. Okay, so that is question one. What I'll also do for you today, when I'm sending out the links to the recordings of the session, what I will do is I will send you the solutions to this mock paper. Is that okay? So you can see and I think the way I have the solutions done, I have done them all with formulas. Is that okay? So you'll be able to see where did he get that figure there. Just click on the number and you see, yeah, it's that multiplied by two, and you should be able to see what's happening. Is that okay?
Yeah.
So that is the grant. Now, next up, and I'm focusing on question one and two because that gives you 140 or 100 out of 140 marks. So that is that. So the next question is compulsory. This is a extract of the final accounts. So there's the 3 years of accounts. Um, and it's a summary profit and loss and balance sheet in summary format. And again, there's three things you're asked. You're required to calculate any six ratios of your choice for each of the 3 years. So that effectively is doing um, 18 sums, isn't it? So it's three sixes or 18. And how I would do that, just to tidy this up now, see if I can tidy it up a bit for you. Um, so how I do, so six ratios. So I would sort of um, pick on what six ratios am I going to do. So, so what I would do is, say we decide the gross margin, gross profit percent. So I would do gross profit percent, yeah. And gross profit, and this is 2023, 2022, and 2021. So we can just if you do your six in a grid, are you with me? It just to me it just makes life an awful lot easier. So so again, I know what my gross profit percent is. So what's my gross profit percent? My gross profit percent is my gross profit divided by my sales, isn't it? So I got it 0.27 there. Again, if you format your cells to show percentage, percentage, okay. So now we've 27.65. Yeah. And I show you a trick here because I have done it in tabular format and those numbers are beside the other numbers. If I do that, it'll calculate the gross profit for the other years as well. Then I might do my net profit, and again, whichever net profit figure you do, it doesn't matter. Um, Net profit percentage. So what's my net profit percentage? Um, so my net profit, say we do that one there. So my net profit percentage is my net profit. divided by my sales. There's my sales bump. And again, the same thing. Um, so we format that as um, as a percentage. Okay. So my net profit is 6.11%, which is grand. And then again, because the figures are beside each other, so now I have 6.1% in 2023, 3.5, and then and you have the list of ratios, and in the paper you have so I'll give you a list of the ratios. So you don't even have to go rooting through your notes. I will give you the last page of your exam paper is the notes, so you can say, okay, so the next one is the you know return on net profit, so stock days or debtor days. Now the question does give you does give you a guidance in terms of, it says, look, you have to do, what does it say? Profitability. So one from each of the following. So one profitability, one liquidity, and one management efficiency. So I've done two profitability. Liquidity then is either your current ratio or your quick ratio, and management efficiency then is your stock, your debtors, or your creditors. So again, make sure that you do one from each. So that's your two profitability. What's the liquidity is the current what what do you want current ratio. It's current ratio. And again, however you show your current ratio, you can show it as a number, you can show it as 1 to 1 or whatever. So the current ratio is your fixed assets, and you see we have there, yeah, so the fixed assets, current assets. So if I drag this down just to show you how to do this, current ratio is your current assets divided by your current liabilities. So your current ratio is 1.51. So it's easy marks to get. So you only have to do six. And again, as I say, I've showed you a trick now where you can just copy it across. So now you can see, and in this company, I hope that a trend is emerging that they seem to be getting better. The current ratio is stronger year on year. Their net profit is getting stronger year on year. Their gross profit is getting stronger year on year. So, this is a company. So in the second part where you have to comment, so calculate. So part A is just the sums, and then write a short comment on each of the six ratios, or write a comment on any combination of the ratios you've chosen. So what I'm expecting you to do is, and how you do it. So it just says write a comment, a short comment. So it's not write a book or write a tome or whatever. So for, say, the gross profit, and again, when you're looking at so what we could do here is we could put in comment, um, and stretch this out, and just put in a comment. That the gross profit is good and it's getting better year on year on year, or something of that nature. The net profit, and like we say in the notes, anything over 5% is good. So certainly the profits have doubled in the last 2 years. So what you're showing me is that you understand the implications of the numbers, because I said that to you at the start. You're not accountants, you're credit people. I want you to understand what's going on here. And what's going on here is their profits have doubled over the last 2 years. They've gone from 2.8 to 6.1. This is a company that's heading in the right direction. From a current ratio perspective, 1.5 to 1, it's a perfectly solvent company. Do they have enough to pay their bills? Yes, they do. And not only did they have it 3 years ago, they're getting stronger financially as each year goes by. Now, maybe the exam question won't be as clear cut, and it might be getting worse or whatever. What I expect you in the comments is to recognize the direction that these accounts are going in, and whether the figures are good or whether the figures are bad. So it can just be a couple of lines on each of the ratios. So you might do debtor days or whatever. So debtor days. You might do creditors, you might do a quick ratio, you know, so just pick whatever six that you want to do, and then just write a comment beside each one. Or you can do it in like in terms of yeah, so I told you I will give you the answers. So the way I did it in the answers, and you see this, you know, profitability ratio. So how I did it was I showed the gross margin and the operating. Gross margin has increased year on year, which is a good achievement, particularly if there's been no loss in volumes of sales. Operating profit has also improved significantly this year, indicating good control over running costs. So I'm just sort of taking the figures and just writing. So when I say write a note, that's the kind of note that I'm looking at. Is that okay? So that's so I send my notes. So in terms of how you do it is up to yourself. If you want to do a grid, if you want to do it in linear form, that's fine. What we want to know is one, can you do the sums? Two, do you understand what the ratios are telling you? And to me, that's the most important thing. So that's fair enough. And then the final part of this question is based on the ratios you have chosen, state whether you consider the company to be high, medium, or low risk, and whether you would extend a credit line of 50,000. So again, that's um that is that. So again, that's down to your ratio. So again, it's not about your opinion. It's about give us the figures to say yes. And one of you might say yes, they're good for 50, and another might say no, they're not good. What's interesting for us is your logic as to why you think they are good. And there are models, you know, in terms of your working worth and all that kind of good stuff. So you can say, well, look, based on the working worth, yes, they are good for 50 grand or whatever the case may be. So just have some basis for your criteria. And and that is so your P&L account, the ratios, a comment on the ratios, and you know whether you consider them to be good, high, medium, or low risk. And now I've only done three ratios there. Immediately, low risk is jumping out. So they're solvent, they're profitable, they're getting better year on year. To me, looking at this is a low risk company. Would I be happy giving them 50 grand all day long? Yeah. Okay. So that is what's required. Now, that is, and question one is going to be a P&L. Question two is going to be, and it is going to be 3 years. Okay. So, you know, sometimes we give you three companies to compare the three companies. In the exam, it is going to be 3 years. So you just have to compare the 3 years again. So that is that. Okay. Now, on the other questions, so I stop sharing. The other questions, I'll send you the solutions, so you can have a look. And if you have any questions or you don't understand where I got the answers from, that is, they're all there for you. On the real exam, question three, and just remember that from question three to question eight, you only have to answer two. So you don't have to do everything. So question three is going to be on cash flows. Okay. To me, that's one of the trickiest of all. And if I was doing in your shoes, I would avoid that like the plague. But anyway, that is just me. Um, so, but again, it is fairly simple. Hold on now, share. Um, I'm back sharing my thing here. So, question three. Oh no, that was a different question three there. Um, question four is FIFO and LIFO. And again, like this is the answer to the question, and I'll send this off to you. You know, it's pretty. Once you get it, it's only one sum you have to do because if you're doing them on a first in, first out, like your sales, your opening stock, your purchases are the same. So it's only how you value your closing stock that changes. So, you know, that's what you're given, and then that's adjusting it for the price increase or whatever. And then your average is just adding one, you know, adding the two figures and dividing it by two. So it is fairly simple. Question 5 is going to be on bad debts. So again, it's going to look something like this. You're going to be given a ledger, um, we'll calculate it, and you work out, how much you reckon is recoverable, how much is irrecoverable, and how much you have to provide for. So that is that. Question 6 is going to be, where's question 6? Uh, oh yeah, question 6 is going to be on Z scores. Yeah, so the Z scores, the model where you put in 1, 2, or 3 or whatever. Ugh, that's a bit messy, I think. Question 7 is the scoring grid. Now, I do this all day long. So you're given the grid. So you just literally have to put in your zeros, ones, and twos. So all you have to remember is that for 0, 1, and 2, 0 is the best and 2 is the worst. And if you want to know, is it a higher or a lower figure? We want a higher figure for the things that we like, and we want a lower figure for the things that we don't like. So in terms of profit, the higher the profit figure, the better it is for the business. In terms of costs, the lower the figure is, the better it is for the business. Yeah. In terms of debtor days, the lower it is, the best it is for the business. Yeah. In terms of, you know, quick ratio, the higher it is, the better. So just make sure that you have that logic that says, higher or lower or whatever, and then just put in your zeros, ones, and twos and add them up and get. So that's, to me, that's a handy question 7. Question 8 is your multiple choice. What I've done for this is the results I'm sharing with you. So what I've done is not only have I highlighted the correct answer, I've worked out here how I got to the correct answer. Is that okay? So you can see on the side, I've taken out the debtors days, the daily sales, the DSOs, and showed you which one it is. So hopefully that will help you. Um, so that's that. So that's question 8. And that's it. So you only do 2 of those. So personally, question 7 I would do all day long, and probably but you decide which ones you like, and you just do it. And 20 minutes is enough for that. So focus 40 minutes question 1, 40 minutes question 2, then you have 20 minutes each for the other 2 questions. If you want to do a third, do a third, and then just submit it all by 12 o'clock noon next Saturday, and then you're done. So that is all I have to say to you on that. So now you know the format, you know what to expect, you know what the questions are going to be. So it's just to be at your desk, attentive, next week, and look, I know it's easy for me to say relax because I have the answers in front of me. Panicking doesn't benefit anybody. So just give it your best shot, and show off all that you've learned throughout the year. The as the Hitchhiker's Guide to the Galaxy. There was 2 great words from Hitchhiker's Guide to the Galaxy on the side of the rocket. It had in brightly colored letters the words "Don't panic." So yeah, so that's my words to you. Just don't panic. Just get it. Start off, with what you find easy. Get into it. Manage your time. You will be fine. Okay. I see there's 2 people in chat. Oh, Christine's gone. Okay, that's grand. And somebody else has to go as well. Oh, there. Okay, that's grand. So, guys, thanks for your time and attention today. And the best of luck next Saturday with the exam. And as Paul said, and Angelina and myself, we're around all week. So if there is anything you want or need, now Angelina's not in the best of form. She was on to me yesterday, so she's been sick this week. So maybe if you want to talk to me directly, I'm around all week next week. And I know the panics will
Okay,
set
thanks,
in.
Declan.
So we're there for you. All right,
Thanks,
so I'll
Declan.
hit stop. Have a great one. Enjoy the rest of your weekend. Take care. Bye. Bye.
Thanks,
Thanks.
Declan. Bye.
Thanks.
Bye.
Bye. Bye.
You,
Bye.
bye bye.